Welcome to TheoTrade. This is Don Kaufman. Here we are. It's November 29th, 2017. We've got about 15 minutes to go to the cash close on a day that can only be described as divergences and, well, a whole lot of chaos. So if you tuned in over this past weekend and specifically on Monday, in Monday night's video, I definitively had a bias, and that bias was to the downside. Of course, yesterday's trading session, if you were aware, or maybe you weren't aware, but yesterday's trading session saw anything but that downside bias. Nevertheless, today we're seeing the Nasdaq specifically under some fairly extreme pressure. But as I said a moment ago, it's like a day of, when I say like chaos and divergences, allow me to take you into this and in a little bit more depth. So right now, again, about 15 minutes to go to the close, the S&Ps are down just 2 points. They're, for the most part, they're massively unchanged. The interesting thing about the S&Ps being down 2 points is, if you tuned into this weekend's video, I talk extensively about expected moves on the weekend videos. And what I'm bringing into scope right now happens to be, well, just that, the expected moves. The upper band of the expected move is right, well, pretty much we're on it. Now, you got to remember, I draw these things every Saturday, and it's not like, in a matter of moments, I just draw the line over here. This is literally the S&Ps skimming along a line that we drew last Saturday to show you just how imperative it is to understand these expected moves. Now, okay, switching gears a little bit, I think everybody's a little shocked by some of the action inside the Nasdaq. And I talked about, a moment ago, chaos and in divergences. What do I really mean by that? Well, we just showed a moment ago the SPX, that is the S&P, cracking the upper side and sitting on the upper end of the expected move of the week. Well, here's the Nasdaq. The Nasdaq right now is actually drifting below and well below its expected move for the week. So we've got one index product that's breaking to the upside, but skimming the upside of it, which is the S&Ps. We've got the Nasdaq, all right, which is actually broken below the expected moves. And again, what it means to break below these expected moves is that selling may just persist and continue to drive a product lower. It becomes at that point, all right, a dynamic hedge. Now, okay, even more chaos for you. If you take a look at something like the IWM happens to be none other than the Russell. So for the Russell, I'm actually going to apply auto expected moves. Now, the Russell is sitting just north of the expected move for the week. So time out for a second. Here we are on Wednesday. We got, again, 2 trading days left in this week, and I'm telling you, there is volatility a-brewing everywhere. Now, let me show you another area that has really got me a little bit perplexed as a trader. Now, I've been watching different aspects of tape and quantitative, metrics for years, and I've never actually seen divergences quite this large. What you're looking at here is the ticks, and it's a accumulation of ticks. It's actually what we call quantics. Okay, for quantitative tick analysis, we call it quantics. And you're looking at the Russell diverging from the S&P, diverging from the NYSE and the Nasdaq. And again, I've been watching this for years and have never seen divergences like this. Specifically, what is causing the divergence has a lot to do with financials. Okay, financials, well, first of all, financials have exploded, okay, in the last 2 trading sessions. And this, to me, is the unexpected area. But you really have to think about financials in the next 2 trading sessions. Like, okay, right now, forget about whatever you think is going to happen a week from now, 2 weeks from now, a month from now, a year from now. You got to get through the next 2 trading sessions. And anytime any volatility starts to emerge, you need to be a little bit short-sighted. You need to be, kind of finger on the trigger and be like, listen, if you're long these markets right now, you got to be thinking, is this it? Is this going to be the big one over here? Are we going to see real volatility, or are we going to see what we've seen every single month is buy the dip? Because right now you got the Nasdaq down over 1.7%. A lot of people are going to get nervous this evening. While you're watching this video, you're probably a little bit nervous. You're like, I don't know, I'm tuning in because I want to see what this marketplace is going to do. A lot of that, okay, is going to reside right here into the financials. And why? Because the financials, people, this is the stabilizing bid. And when I say stabilizing bid, the financials exploding to the upside is the stabilizing bid under the S&Ps. So to look to the financials, though, isn't enough. You also might want to consider what the bonds are going to do. If the bonds decide, okay, to turn positive in the next 24 to 48 hours, it's going to spell trouble for the financials, and it's likely to cause the sell side activity to proliferate in the marketplace. And that's what you need to be thinking about. You know, don't worry about individual stocks, because today was about the sell side activity of only a handful of stocks. I mean, Microsoft didn't even get knocked by 2%. All right, and I'll freeze the screen for just a moment over here so you can take a look. So Microsoft, Netflix, but Netflix, its market cap isn't really big enough to do any damage. Okay, Apple's off by 2%. Facebook gets hit by 4%. There's a big one. Google down just over 2%. Amazon, all right. So Amazon's down 34 bucks, but oh, come on, give us a break. The thing has been up how many, umpteen trading days in a row. Taking a $34 hit isn't even like getting scraped on the arm, okay, to the behemoth of ultimately Amazon. However, it does make for an interesting looking chart in here. Now, one of the things is, again, we didn't see any huge sell side activity in today's close. And it really is, when you're looking at the marketplace today, kind of a tale of like bifurcations. I mean, you got Amazon down big. Since when all of a sudden the marketplace loves Target? Hey, what's not to love? The thing is up $5. That's almost a 9% move. They're still buying Walmart out there. Even more, okay, unique. Look at the advanced decline lines today. Right? If you haven't looked at this in the advanced decline line, this is the S&P 100. We're actually, advancers are over decliners. It's 63 to 39 advancers over decliners on a day where the Nasdaq is down, 1.6%. Even a little bit more unique, if you looked at the advanced decline line inside of the Nasdaq 100, okay, it's not half bad. You've only got 64 decliners. However, the products that are declining are getting smoked out there. You'll want to look at stocks like we just went through a couple of them, but the Microns, Nvidia got, decimated in early trade over here, Netflix, and so forth and so on. So again, the sell side activity seems at this point isolated, okay, to the underlyings that have had incredible upside in recent months. The, again, entire question here, is this going to proliferate? And there isn't a definitive answer on the screen. And I know that's everybody's looking for, where's the definitive answer? Because if you take a look at the volatility and the volatility futures here are bid up. But I mean, come on, they're up a whopping 2%. Don't look at the VIX. That's, again, it's not worth spending the time. The volatility futures are kind of the here and now. Where I think we have to be very, very cautious in this marketplace. And again, let's get through the next 48 hours before we really start, all right, to make any big time assumptions in trade. In the next 48 hours, we got to look at the futures in overnight trade. One of the things I'll be looking for is, are we going to see the bonds spike, for example, this evening? Okay. Could that cause sell side activity? Could we wake up to a morning where the S&Ps are going to be down big? Or is this just a shot across the bow and we turn around and just buy the dip once again? So again, a tremendous amount going on inside of trade today. What we term the monsters of technology. That's the terminology we give to Facebook, Apple, Microsoft, Google, Amazon. The monsters of tech getting hammered today by about 2.6% into the cash close. Again, is that sell side activity going to proliferate? Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.